rounding third with home plate in sight. But even the best players need a coach to wave them in. Safe! Welcome to Perfect Game Retirement, hosted by Ryan Ledden, former pro baseball player, University of Georgia economics graduate, and now certified financial planner with Black Oak Asset Management. He's here to guide you through the final stretch and help you slide safely into a winning retirement. Play ball!
Welcome in. This is another episode of Perfect Game Retirement. Glad to have you on the show this week. I am Ben George with Ryan Ledden. He is president and financial coach, also certified financial planner, Black Oak Asset Management. They have offices in Alpharetta, Macon, Lawrenceville, and serve all the Atlanta area. You can find everything online at blackoakam.com. And Ryan, what's going on this week, man? What's new?
Probably about the same as last week from navigating travel ball schedules. I mean, last week was Mother's Day, and our family was like split apart last weekend. We had one group in Dalton last week for a tournament. That was me and Lindy. And then my son and wife were in, Cartersville. So, yeah, not the greatest of Mother's Day. I don't think my wife liked it too much being at different ballparks. But the silver lining was my son's team lost pretty early, and then they just drove 45 minutes to an hour north and came to Dalton. So at least got to spend a little time, and this weekend, one's not playing, so actually we get to be at the same park all weekend.
I love that. That's probably the only time I'll hear you say the silver lining is they lost early.
I know, right? Yeah, I mean, I hate it for them, but they were playing like in a higher age group. They don't normally do that in baseball, at least at his age, because there's a big difference between 11-year-olds and 12-year-olds, and they got worked pretty good. So, they got out of there pretty quick.
That's going to happen from time to time, but not often. Well, glad you had a good weekend, and we're glad that you're with us today as we have a couple of fun topics to talk through. We're going to have a little retirement game show. We're going to take some of the best game shows that you're familiar with and apply them to the lessons and how Ryan actually works retirement planning and the conversations he has with clients that are very similar to these types of game shows and the outcomes that you would find in these shows. Also, we're going to talk about risk tolerance as well. I know risk is such a big part of building an investment strategy, a plan, and a lot of you are probably maybe rethinking your tolerance for risk after the last couple of months as well. So We'll talk about how Black Oak Asset Management helps you figure that out. Now, if you want to first start with retireperfect.com. There you can schedule a meeting with Ryan, set up a time to talk with him, but you can also get your hands on Ryan's book. Everything is right there at retireperfect.com. It's a one-stop shop. We make it easy for you for listening to the show, and we appreciate you being a part of Perfect Game Retirement. So let's jump into our first conversation, Ryan. Let's have a little fun with this. I know it's been very serious the last few weeks with everything going on in the market, so we'll pull back a little bit and have a little bit of fun and play a little retirement planning game show. Price is Right. I love the Price is Right. Growing up, still on. It's had incredible longevity. If you are at home during the day, you probably will come across it. But I want to play this a little bit because, the idea is guessing the right price. And again, this goes back to what's kind of been going on with the stock market in the world of stock trading. A lot of emphasis is placed on buying a stock when the price is exactly right. Is it overvalued? Is it undervalued? This is the game that you're playing oftentimes. How do you approach this, Ryan, with stocks and finding the right price? And how do you work with your clients on trying to find the right spots? Because I know you don't want to try to time the market.
No, we definitely make that up front. We make that pretty clear that, hey, we're not day traders. Do we look for opportunities? And oh yeah, sure. Any advisor who doesn't say that, that would be a head scratcher, but we do look for opportunities, but we're not looking for. Now, obviously there's been some pretty significant swings in the market, and people who are not fearful of these, big swings in the market, they're putting more money in, and then they're saying, hey, if you see some good buys. So I do have clients that do that. And that's usually with brokerage or what they call non-qualified assets, your non-IRAs, your non-Roths. So more brokerage account where you can, trade in it. Not that you can't trade in those IRA accounts, but certain individuals are looking for opportunities, and that's what we are there for. And I tell people hey, this volatility is probably going to continue on. We've seen ups and downs, and this past week you saw some pretty good upticks in the market. So the volatility is never going to go away. It's just how volatile is it going to be? And we do look for opportunities. So we do have some clients that are like, hey, if you see an opportunity and the market's down 2, 3, 4+ %, and you see an opportunity, then there's money sitting in those accounts on the sidelines, if you will, to be able to take advantage of that opportunity. So again, we're not market timers, but hey, a lot of times there is some kind of quick recovery the next day. Not always, but there sometimes is. And that's where you see all these stats and, people who pull out of the market, their rates of return are really hurt because they're not there for those quick recovery days afterwards because they panic or, they get fearful and they move out of the market. So we're looking for opportunities, but we are not quote unquote stock brokers. That's not what we do. We are more long-term, holistic, or what you say, comprehensive planners, and that's what we're there to do. But we definitely look for opportunities. But we're not. I don't have 15 screens on my desk, and we're doing these day trading stuff. That's not us.
All right, so that could be a red flag potentially if you're working with someone that doesn't take that approach as well. All right, what about the game show? Are you smarter than a fifth grader? I don't even know if this one's still on, Ryan, but it was a fun concept when it was out, and I know I watched some of the episodes. But the idea, I think, here, applying it to retirement planning is you shouldn't have to be an expert in finance to understand a retirement plan, right? I mean, honestly, you should be able to explain it to a fifth grader in many cases, right?
Yeah, I mean, you don't want to get into what you don't understand. You need to know all the weeds of every single investment that you have. No, you don't need to know all, several hundred companies, if not thousands of companies that are in certain mutual funds and ETFs. You don't need to know that. Could I list every single company that is in every single fund that we have? That would be very difficult to know. But we know what asset class they are. We know what risk it is. So as far as what you're in, to be able to describe to people what's an ETF, what's a stock, what's a mutual fund, you should be able to do that. There's some complex strategies and products, if you will, or investments out there that are very difficult to understand. Sometimes there's holding periods. You can't get to your money, or you can only get a certain amount out at certain periods of time. So those get very difficult. But again, they're a fit for some people. And as an advisor, that's our job, is to relay that information and educate people on what they have and what they don't have. So And yeah, I have no idea if this game show is on anymore, but it was entertaining at the time. The few times I did watch it, but I do know the few books that I've written, that's the kind of the level that they tell us to the editors that we use. They say to write to about a 5th to 6th to 7th grade level to make sure you can understand it. Now, if you want to get into more complex strategies within that investment, then that's where it's kind of more of a one-on-one conversation. But when you're talking about people who are potentially reading your book, you want it to be a 5th or 6th grade level. So yeah, I totally agree. Don't get into anything you don't understand.
We're playing some retirement game shows here on Perfect Game Retirement. Again, if you have questions for Ryan, want to schedule a time to meet with him, we actually make it as easy as possible. Go to retireperfect.com. You can schedule a complimentary consultation, begin talking about your investment strategies, whatever financial questions you might have, or just begin building out that plan to make sure you secure your financial future. It all begins at retireperfect.com. Who Wants to Be a Millionaire? Regis Philbin. I think of him. I don't know who's hosting that these days, but this game show just captured the world, I think, when it first came on. And it was a lot of fun back when you weren't streaming and you weren't distracted by every platform out there. But I think, Ryan, this is a pretty easy one. I think everybody wants to be a millionaire, right? And oftentimes they just think, hey, if I can get to that point, I'm going to be in pretty good shape, but $1 million isn't quite what it used to be, is it?
No, it's not what it used to be, for sure. Obviously, that's changed over the years, especially recent years with inflation. But there are other ways, because we talk about being a millionaire, and so sometimes that's not having $1 million in a retirement account or checking account. It could be in real estate. But also, when you get to retirement, it is 100% about income. Sure, you want to have a good nest egg, but it is about what do you have coming in. And we have a lot of pension employees as clients. I was a former teacher. We have three other advisors who were in the education world as well. One as high as a superintendent, and then one other that was a retired teacher, and this is their second career, and another one that was a teacher like me for a short stint, and then went on to this world that we're in now as far as a financial advisor. So We educate people, and sometimes the state employees, it's a great pension here in the state of Georgia. The TRS is awesome. You get a 3% raise every single year, and that adds up. Just like inflation adds up, those 3% raises add up. So I try to educate people. If you're a teacher or an administrator or superintendent or principal, whoever, and you started at 22 and you're retiring at 52 to get that full 30 years in, getting that pension that you have, that's like having seven figures in an IRA to create that kind of income. But the other caveat is, I tell people, you're 52 years old. If you had 1.5 million in a 401k, well, you couldn't really access it anyway until age 55. Or if it was in an IRA, you couldn't access it until 59 and a half. So income is key. So if you have rental properties, you have rental income. Sometimes being a millionaire may be misleading when it comes to just a dollar amount, but what's my income? What are my Social Security benefits each month? So you may not even need to be a quote unquote millionaire to have a good retirement.
Yeah, that's so important to know. And again, you want to know what that number needs to be. You want to have a plan so that and you're not guessing or hoping that you have enough. And again, that's where you start with Black Oak Asset Management. Final one here, Ryan. Family Feud. I love this one. Steve Harvey, I think he records it there in Atlanta, right? That's where they shoot it, right? I don't think the Ledden family's been on there yet, but maybe one day you guys will make an appearance. But this one's fun too, and I know that family is so important. And when you don't have a well-conceived retirement and an estate plan, this is often what you end up with, right? A family feud. And it's why I know you guys prioritize these conversations with families when you have them.
Yes, this can be this can go very smooth or it can go very poor, very, very quick. And feuds on money when people pass away it's amazing what happens in the stories that I have heard. I haven't, as far as firsthand, we haven't had a quote unquote disastrous or one of those to use another almost game show, Jerry Springer type events where you have just people feuding at one another. Are there disagreements? Sure. But if you have an estate plan laid out, it's so crystal clear, it's so buttoned up. And if you communicate that, the person who is creating that will for themselves an estate plan, if they're just open and honest, it makes this so much easier through that transition. And sometimes we don't know when that transition is. Sometimes we have a good idea when that transition is going to be. We just had a client pass away not too long ago, and he was in bad health. And so we do offer that service through clients that work with us, an online service that they can create a will or a trust and medical power of attorney and financial power of attorney, medical directive, all those things. So they took advantage of that feature that we offer our clients, and she was just super grateful that service was provided, that she could get that done, knowing that her husband was deteriorating, and they knew the inevitable. They just didn't know exactly when, but he was of sound mind to be able to do that, and she was forever grateful. So hearing stories like that to me is like, okay, we're doing our job in that instance. So. Yeah, you want to prevent a feud. It is not a good thing. And if you're transparent and if you have an estate plan buttoned up, it makes it easier for everybody. Trust me.
Well, this is kind of a fun perspective on retirement planning, but the bottom line is you don't want to play games with your retirement, right? You want to make sure you have everything in order. And again, you can do that right now by scheduling a time to work with Ryan and the team at Black Oak Asset Management. Again, offices in Alpharetta, Macon, Lawrenceville, serving all the Atlanta area. So no matter where you are, get in touch. RetirePerfect.com is the spot to do that. And Ryan, just kind of quickly, for anyone that does schedule a time to sit down with you and talk, what are we talking about in that first meeting?
Yeah, our process is fairly simple. If we don't know you at all and you hear us through this radio show or our YouTube channel, usually we just schedule a high-level kind of introductory call, 15, 20 minutes. It's just an open-ended conversation, so I have zero agenda. It's me listening, answering questions that you may have. And then if the conversation goes well and it sparks an interest in you and in us, then we do that longer in-depth meeting, whether that's in person, Zoom, or another phone call. We prefer in person, but sometimes that just doesn't work out. So, and it's usually after that longer in-depth meeting or Zoom or phone call that people either decide, and we kind of decide mutually if we want to move forward together, or, go in a different direction or continue to do what you're doing or work with somebody else. So that's kind of our process. And then there's a few meeting process after that, because we do a lot of financial planning, and we want to see all accounts and tax returns and you name it. So we want to get people, pointed in the right direction if they do work with us.
All right, very good. Again, go to retireperfect.com. You'll see the link to schedule a time to meet with Black Oak Asset Management. All right, we got more coming up, including a conversation about risk tolerance, how to know if you're comfortable with the amount of risk in your portfolio. That's coming up next right here on Perfect Game Retirement.
Love what you're hearing on Perfect Game Retirement? Well, now you can take Ryan Ledden's financial wisdom on the go with the Perfect Game Retirement video podcast. It's available on YouTube, Spotify, and Apple Podcasts, and it's an extension of the advice you trust on demand and anytime you need it. From retirement strategies to tackling taxes and everything in between, Ryan's podcast dives deeper into the topics that matter most to your financial future. Subscribe today and never miss an episode. Search for Perfect Game Retirement on YouTube, Spotify, or Apple Podcasts, and start building your perfect retirement plan. Or you can visit retireperfect.com. That's retireperfect.com.
Well, thanks for being a part of Perfect Game Retirement. We're here every single week talking about financial planning, strategies, conversation, just trying to educate the listener on retirement planning and everything that Ryan does at Black Oak Asset Management. And we're going to talk risk tolerance in just a second. But first, Ryan, I thought this was a fun little history lesson for you and probably for anyone listening. It was for me when I came across this. But 86 years ago, in May of 1939, NBC aired the first televised U.S. sporting event, which was actually a college baseball game between Princeton and Columbia. You could have given me probably 6 or 7 guesses, and that would have been that would still not have made my list probably.
No, college baseball. Oh my gosh. It's a very served sport, if you will. But yeah, for it to be the first one 86 years ago today, that's kind of crazy. So yeah, I would have lost a lot of money on that, especially Princeton and Columbia. That's, I wonder how many people actually tuned in. I wonder if they had the capacity to be able to see how many viewers that they did actually have. But that's pretty crazy that it was 86 years ago in baseball. Yeah, definitely football, basketball would have been the first two. And I don't know what my third guess would have been. I guess you have to go through pro and college as well. But good for baseball. And you had some baseball recently too, didn't you?
Yeah, I was working down at the ACC or up at the ACC baseball tournament up in Durham, which was it's always a great event, great ballpark. Did you ever have a chance to play in Durham when you were coming up?
No, Durham at that time was in the Tampa Bay organization, but that was AAA at the time, and I was my first 3 years with Tampa Bay. I made it to single A, and then once I got traded over to the Pirates, then I advanced beyond that. But yeah, AAA Durham was with Tampa, so I never got to play in that park. But obviously seen the movie Bull Durham, yeah. But I mean, I'm sure it looks very different than the movie.
Yeah, that park's still there down the road. They play in a newer park now, but it's a great facility, but a great venue and always a great time. College baseball, great time of the year, and I'm excited for what's to come here with the playoffs and the College World Series coming up soon. So should be a lot of fun. But I thought it was a fun fact to throw out there as we jump into our final segment here, which is on risk tolerance. So again, if you have questions for Ryan, if you haven't built out your portfolio, really want to discuss your investment strategy and make sure you aren't taking on really more risk than you're comfortable with, but also more than you need to take on, go to retireperfect.com. Schedule a complimentary consultation with Ryan. Again, right there, retireperfect.com. It's available to you right now. So talk about risk tolerance, Ryan. How would you describe that concept to someone who isn't familiar with what exactly risk tolerance means?
Yeah, I mean, that term gets thrown around a lot. Risk tolerance is really like, and we talk about the psychology and the emotions of money, but it's really your emotional and like psychological comfort with risk. Like, how much are you willing for it to go up and how much are you willing for it to go down? Obviously, on the upside, people are willing for it to go up forever, but there's a downside to that. There's a standard deviation number. There's a math component to this risk tolerance when it comes to the stock market, even though there's a ton of emotion when it comes to this stuff. Especially we've seen it recently with news headlines. You see markets go straight up or straight down. But it really, you need to know how far down your portfolio can go. Technically, could it go to zero? Yeah, because the market could implode. Is that a realistic thing? Probably not, but it is a possibility. But there's still, each investment, each ETF, each mutual fund does have a band of almost 95 to 99% certainty. It's going to be somewhere down a certain percentage or up a certain percentage. So the risk tolerance is really what you're comfortable risking. And then there's a whole nother concept of risk capacity, is just what's your ability? How much ability do you have to take on risk? And some people don't need to take on. Their risk capacity is going to be more or less. So those terms are slightly different, but the risk tolerance is more of the emotional part, and risk capacity is more of the math component of it.
Okay, good explanation. So how do you at Black Oak Asset Management help really get an understanding of what someone's risk tolerance really is?
That's a great question. And that's usually over time.
Okay.
We have risk questionnaires. We do have risk assessments. That gives us just a very general idea of, is someone really risk adverse, or are they risk tolerant? Are they willing to stay the course on these swings? And when I say you don't really notice that till over time, until you go through, a 2020 during COVID, or a 2022, when the market is doing very poor in all aspects of the market, whether it's safe investments or risky investments. And then this year, can you stay the course on those things? So the real true measure of risk tolerance, I think, is over time, but you at least have to have a starting point of, okay, in these tools, these softwares that we have, it does give us an idea, and then we construct the portfolio, we kind of back into the portfolio based off of that.
Okay, that makes sense. Well, if you want to sit down and discuss that again to figure out what your risk tolerance is, begin with retireperfect.com to schedule a time to talk with Ryan. You got the opportunity right now to schedule a complimentary consultation with Black Oak Asset Management and begin talking investing, whatever it is, investing, estate planning, whatever you have on your mind, whatever you're concerned about or curious about, you can begin that process at retireperfect.com. How much does a client's risk tolerance factor into that plan that you're building for them and designing for them?
Yeah, it's a foundational piece, because as an advisor and as a fiduciary, you have to do what's in their best interest. And so if we misalign what people's risk tolerance are versus, what the portfolio is set up as, then that's not good because we carry that liability, if you will. So we have to make sure those are aligned and really stress test it. So once we create the portfolio, they've done the risk assessment, we created the portfolio, but then we say, okay, but again, remember, are you okay with this being down this much? And we use percentages, but we use hard dollar amounts. And usually the hard dollar amount is what really grabs people's attention. So if your statement goes from this to this, are you still going to be like, no, we're good? And sometimes that's a realization for people, like, ooh, no, I don't know if I would be good. So let's move that bottom half up a little bit. So okay, that's fine. We can totally do that. But the top part's going to have to come down too. It's a give or take. It's a risk reward type of thing. So some people's risk tolerance is very different, and age has a lot to do with it, but it is not everything. I mean, we hear all this stuff. Oh, I'm about to retire. I got to get super conservative, or I got to be more fixed income. Not necessarily. And same thing with a young person. They may not have a high risk tolerance. And do I think long term are they kind of giving up some upside of their potential account? Yeah, absolutely. So we do try to educate people on that, hey, you're not going to need this money for 20, 30 plus years. So we do have to make adjustments on that, sometimes with age, but that's not the end all be all.
Yeah. Well, you kind of touched on this, is what I was curious about, that there is a wide range of disparity when you talk about people and the risk tolerance, or are they in a very, very similar kind of area? I mean, is it all across the board when you're doing this?
Yeah, no, because even with we even did a couple clients that we just recently got. The husband was almost a 1. So we kind of do from a risk spectrum from 1 to 99 being super risky and 1 being completely risk averse. And he was barely over a 1, and his spouse, she was in the 80s. So
wow. It's
like, okay, so we look at people's assets as a pie. It's all together. But okay, we educate people on, all right, so if these accounts, if this account here needs to be more conservative with his money, that's fine. Even though it's both your money, that's fine, but we need to make sure we understand that this portfolio is doing this. So when the market is way up, this account's not going to be way up. And that's okay for some people because they don't want it to see way red when the market does go down. So it's a give or take, but yeah, even just within couples, it could vary immensely between couples, much less our whole client base.
Yeah, that's pretty interesting. Well, I know there are people that have that very low risk tolerance. So for those that are, and especially probably now with the way the market's been, you might feel like, okay, I don't want as much risk. So how do you maybe design or maybe have an example of how you've designed a plan for someone that does have that really, really low risk tolerance?
Well, the good thing, the silver lining with interest rates is being high is the safe money that we have out there. It actually does pay a little bit. CDs are paying a decent yield. Treasuries are paying a decent yield. Some money market mutual funds are paying a decent yield. So now, are they keeping up with inflation? No, they're generally underneath inflation. So you do have to take that into consideration. So yeah, you see those balances go up, but the purchasing power is actually not keeping up. So it's not a negative balance, but it's a negative purchasing power. So you do have to keep that into consideration. Obviously, there's annuities out there that kind of prevent downsides. There's fixed annuities that have just a fixed rate. They're kind of like a glorified CD, if you will. So they may pay a higher interest rate, but your money's kind of locked up. And if you take your money out early, there could be potential surrender charges. So then there's a fixed index annuity. Those can be like you get a certain portion of the market, but if the market tanks and loses money, you don't lose any. But at the same time, if the market does well, you only get a certain percentages. So there's a give or take there. Just know what you're getting into and just know the ins and outs of those. Those can be perfectly good strategies for people, but just know what you're doing.
Well, it's so important to know what you're doing for sure. And if you aren't sure, if you maybe are a little uncertain or unsettled about your investment strategy, again, go to retireperfect.com. You'll be able to sit down and talk with Ryan by scheduling your complimentary consultation. It's about a 15-minute, 20-minute conversation. It all begins at retireperfect.com. And I know this is just kind of one piece of what you're discussing, Ryan, but how much does investing play into those early conversations?
Yeah, I mean, it's a huge part of it. We talked about risk tolerance being a backbone of it. And obviously the investments, I mean, they're kind of the engine. Now I'll talk about income is really the true engine of it all. But the investments play a part of it. And we want to start with what guaranteed income do you have coming in? What pensions, what Social Security do you have coming in? And then, okay, how much risk do we need to take on to try to make this portfolio last? And which investments? Because even inside of an account, there's all different types of risk of the different funds or different investments that you have in there. And that's where we educate people, kind of a bucketing approach, like, hey, these funds here, these are our kind of 1 to 3 year funds. Like these are not going to go crazy high if the market's doing well, but they're also not going to go crazy low if the market's doing poorly. So there's constant maneuvering inside of people's portfolio. Now, if it's not an IRA or a Roth, we need to be cognizant of taxes, because if you move things around too much and sell things, then that could trigger a capital gains tax, whether that be short-term or long-term. So taxes are a big part of it too. We want to be aware of that, because if there's less going to the federal government, then that's more you get to keep. So we want to be careful of that. So yeah, even within people's portfolio, or even within their account, the risk tolerances are different, even within the funds in the account. And that's where we as advisors just have to educate and say, hey, these are the ones that are going to go crazy when markets are volatile, but these are the ones that are going to be steady.
All right, very good. Well, go to retireperfect.com, schedule that consultation, learn more about Black Oak Asset Management. Again, retireperfect.com. Well, that'll do it for us here on Perfect Game Retirement. Thanks for being with us this week. We hope you'll join us again next week. Again, for Ryan Ledden, President, Financial Coach, and Certified Financial Planner at Black Oak Asset Management, I am Ben George. Have a great week.
Information provided is for informational purposes only and does not constitute tax, investment, or legal advice. Please consult with a qualified professional before taking any action. Securities and registered investment advisory services offered through Silver Oak Securities, Inc., member FINRA SIPC. Black Oak Asset Management and Silver Oak Securities, Inc. are not affiliated.